Curious about investing in ChatGPT? This video is for you on how you might be able to build a portfolio around ChatGPT and artificial intelligence without some of the downside risk potentially. Let's take a look at Microsoft. Obviously working on their $10 billion investment into OpenAI, but what is most fascinating about this is the amount of money that is going to potentially go into GPUs. This is another potential area to pay attention to. Now, by looking at GPU revenue forecasts, there's a little bit of actually a stall there in 2022, where GPU growth has sort of compounded annual growth rate of 14%, measuring from 2017 to 2026. There's billions of dollars of revenue here. You can see between 2021 and 2022, revenue is almost flat, sitting somewhere around billion here in GPU revenue forecast. However, we see that exploding again by over 20% in 2023 and then steady growth all the way through about 2026. So there's a lot of excitement also in the chip space for potential GPU growth, especially with companies like OpenAI, maybe driving reinvestments into chips. Now, the more companies invest in AI, the more we're going to shorten the replacement cycle for TR for chipsets. However, you might see more of an investment also into hyperscale cloud. Obviously, hyperscale providers being companies like Google, Facebook, Microsoft, Amazon. There's a belief that Google might actually, according to Bloomberg, have an advantage over Microsoft in distributing servers for AI. So, server space or server power or computer power for AI over Microsoft. And then, of course, NVIDIA seen as a substantial player for that GPU push for data centers. So if you've used it and you've prompted ChatGPT with something, every single query is estimated to cost about 7 cents of compute. So that money obviously goes somewhere, right? And that money is going to cloud providers, and it's going to chip providers like NVIDIA and AMD, and it's trickling through to chip manufacturers like Warren Buffett's favorite investment, Taiwan Semiconductors. Taiwan Semiconductors has 92% market share of the advanced microchip sector. Of course, then you have a lot of folks that look at companies that also manufacture. You're kind of going through the supply chain line here of OpenAI, right? You're probably thinking that AI is great. Then AI is probably good for a company that has an investment in it, like Microsoft. But then it's also good for server providers like Google. But if it's good for server providers, it's probably good for chip providers like NVIDIA and AMD. But if it's good for chip designers, then it's good for chip manufacturers like Taiwan Semiconductors. But if it's good for chip designers and manufacturers, then it's probably also good for the companies that make the manufacturing machines like ASML and Lam Research, who just reported pretty solid earnings. Honestly, they have a phenomenal balance sheet at Lam Research, phenomenal cash flow, really impressive. So, when you're thinking about investments into, a space like ChatGPT, really you could get a basket of the entire market that may have pricing power as a result of artificial intelligence. Now, there are also profitless tech companies that literally ask you to invest in them because they have AI, for example, a company like C3 AI and Snowflake, even though they're expanding like crazy. Still, you must be concerned about the fact that SAS business model still not having reached a bottom. A lot of layoffs happening in tech, which is going to lead us to less seats, less substantial growth at some of these companies, and some of the valuations for software companies are insane right now. Just as an example, Bill.com trading for 100 times P.E, it means you're looking at PEG ratios that are 3 to 6 times for some of the growth. Some of these companies are expecting and valuations that are very sensitive, even beyond a PEG ratio to falling. Any company that tends to have a high PE ratio, no matter what the PEG ratio is, can oftentimes be a sell in recessionary environments because it's just simple for them to argue. It's a high P.E ratio. So, but even a company like Snowflake, which is expected to have a positive EPS, this year expect it to be positive about 23 cents. By the end of the year, expecting it to be positive by about 50 cents, which is great growth. That's doubling on EPS, right? but you're trading for $144 with 50 cents of earnings for the year. You're trading for 288 times as a multiple for Snowflake? That's absolutely insane. Now, even if you gave them a double for growth, which on APS, which is not sustainable, you're still trading for a 3 peg with a 288 valuation and the likelihood that more money has to be raised. Now, the biggest investments would be companies like NVIDIA, AMD, Taiwan Semiconductors. You can also consider ASML and Lam Research, although there could be a little risk on the manufacturers because maybe companies like Taiwan Semiconductors have already bought a lot of equipment in the last year, and that maybe there could be a slowdown in growth going forward for some of these manufacturers. However, ASML did just report that they still expect manufacturing equipment sales to actually increase by 25% in 2023. Now, these are 5 potentially great stocks for investing in AI. If you then wanted to look at cloud distribution, a simple exposure to Google, Amazon, Facebook, and Microsoft could be a consideration. Now, well, a lot of Facebook's cash flow is going into things like the metaverse, so some of your cash flow might be going to, the future of the metaverse. So you have to be comfortable with that. As an investor, Facebook stock is actually done decently over the last 6 months in its recovery. Now, with Amazon, you have to be careful that on their side, you're seeing a lot of cash flow get thrown into. How can we get quicker delivery time frames to continue to be competitive in our fulfillment networks? And that's a very expensive endeavor, and so maybe that makes Microsoft and Google slightly more pure plays. For a cloud compute, that would be your Microsoft, Azure, your Google Cloud Platform, so look at that. Now, all of a sudden, we're potentially building this portfolio of companies that maybe have pricing power around artificial intelligence, without being exposed to the insane multiples of AI, which is heavily exposed to a software service companies that are extremely expensive, like CrowdStrike and Cloudflare. These are great companies, but very pricey right now. But either way, maybe you introduce a small exposure to companies like that, right? That could be a consideration. So maybe. Now, if you're building a portfolio and you want to be exposed to ChatGPT, how could you build a portfolio of, say, 11 stocks around that? What kind of stocks should you consider? So NVIDIA, AMD, Taiwan Semiconductors, ASML, and Lam Research, Microsoft, Google, Amazon, Facebook, Meta, and then maybe Snowflake at the bottom, right? So this is an example of how you could build a portfolio, and then you could maybe provide a lower allocation for some of the more cloud providers. The pure AI plays, then maybe you would be allocating to some of the others. Now, too bad you can't ask ChatGPT for stock picks, because that data for ChatGPT still stuck in 2011. The chip world has to reinvest in itself to stay competitive. Now, you have to be careful because big tech is laying off a lot of individuals. So again, with layoffs in big tech, you're probably going to see more pain wherein software service, but what does that free up if you lay off white-collar workers? What do you have more of? Well, potentially you have more cash flow, and if you have more cash flow, what can you do more of in a recessionary environment? Well, you just invest, invest, invest. So, no matter what, there is so much money in artificial intelligence that you don't actually have to bet on the artificial intelligence company like ChatGPT, which is not a public company. It is not a company you can invest into, but a movement where the additional free cash flow that is now going to go into artificial intelligence research and investments is probably going to pump quite substantially. The distribution and operating systems for AI is going to be at massive companies throughout not just the United States, but the world. And it's a win for all of the companies mentioned. You've also got companies like Tesla heavily exposed to AI. The more they double down on AI, the more you're going to see a movement towards chip investments at Tesla. Now, of course, Tesla designs a lot of their own chips, but at any point that they need to purchase chip manufacturing equipment or third-party contract manufacturer chips, like NVIDIA or AMD do, guess who's a beneficiary of that? Well, potentially companies like ASML and Research Taiwan Semiconductors. Apple investing in AI, who benefits while substantially Taiwan Semiconductors, The more Apple invests in AI, the more we see their chips designed by Apple and get manufactured by companies like Taiwan Semiconductor. So it's more like the rebirth of an Intel and IBM, and maybe therefore in a portfolio. If you have an Intel and IBM, what you're able to do is put them in as maybe at 12th or 13th position in sort of a ChatGPT allocation. And you see, those maybe as a little bit more value-esque in the whole bucket. Now you can allocate less money to stocks that you believe in, but have concerns over valuation, right? That way, if you're wrong, at least you have a stake, and if you're right and the valuation compresses, well then you could really start building that stake by adding more of an allocation. So that's it for today, guys. Thank you for watching, and I'll see you guys soon.